All right, so this is the health sector, and I am really excited about this one because we have been in Pfizer for so long. It is a legacy position for us. I don't have the portfolio pulled up at the moment, but we purchased 3 shares of Pfizer back in 2015 when we were just starting out and struggling, primarily for the dividend. And Pfizer has been really good to us in paying that dividend consistently every quarter for the last 5 years. But the price has not moved far enough up or down to warrant us buying more or selling. We did have an opportunity, honestly, maybe about a year ago when the price dropped low enough to warrant purchasing some, but at the time we didn't have the cash, and so we missed out on that opportunity. So we're finally selling out of our Pfizer position and looking to get into something else. So what we're looking at right now is Medtronic. And as you can see here, they have lost just a bit of revenue. I think I need to blow these up a bit more. Yeah. Lost a bit of revenue in 2020. And so that's been also reflected in their net income as well. Take a look now at Pfizer. And as you can see here, again, a loss of revenue. Pfizer says this is primarily to the fact that persons were not able to make appointments at the doctor's office, and so they were not able to get those medicines prescribed. And so, of course, Pfizer's working with hospitals and doctors' offices to do things like teledoc and things of this nature. But that's been their excuse for the poor performance. The other thing that's important to mention here is that Pfizer has split their over-the-counter section of their company with their prescription medication section of the company. And the over-the-counter has always been a really great, I'll use the word stabilizer in this company because it was that consumer defensive, you know, you know, just as an example, like aspirin type of sales to really keep the cash coming in. But over the years, it's really been a drag on the company, especially when you compare it to other big drug makers in the space. So Pfizer has separated from them. However, the over-the-counter portion of the business is still reflected on the books, and that will be the case, I believe, until maybe second quarter 2020. I could be wrong about that, but they're still on the books. Okay, so this loss in net income that we see is a reflection of that. But either way, I mean, we have to evaluate the company as we see it in front of us. Okay. All right. Now, Merck, we see was actually able to generate more revenue in 2020, and it has grown their bottom line quite a bit. And so that's important to us. That's kind of what we're looking at. Let's take a look at how these companies measure up on, or in the portfolios, rather, I should say. All right, not a lot of companies here to choose from. Medtronic has been the MVP. Pfizer has much better return over the last 12 months. And Merck, we see, actually performed the worst over the last 12 months. Now, it is important to note that Pfizer has the COVID-19 drug that is going out, and so that has a lot to do with what their performance has been, especially as of late. Whether or not that's going to continue, what's going to happen with that, we don't know. Just want to pull this out just a little bit, kind of show you what that looks like. You can see this big month here in August, which really I think helped put Pfizer over the top. If we pull this out a little further, you see again here in May, but we have Medtronic and other companies that has also done really well over those months as well. So again, the biggest concern for me right now is, Pfizer complains, or I shouldn't say complain, but Pfizer's reason for having the loss of revenue, and not even just with the over-the-counter stuff, but with the prescription medication, their reason was because patients weren't able to schedule appointments to get prescribed, whereas Merck doesn't seem to have that problem. And so, what I want is a company that has consistently grown their revenues, consistently grown their net profit, who's managing their cash, and who's shown consistency, at least over the last 10 years. And that's what we're looking for right now. So let's take a look at a side by side here. Can you pull these out? Medtronic. All right. First things first, looking at price performance, Merck is down a bit, and we've seen that. That's why the average is not great. Pfizer, same thing, down a bit. Medtronic, however, has definitely increased in price, and that is directly reflected in the dividend, which again is very close to being not investable for us because our cap, or I should say our floor, is 2%. Anything lower than 2%, and we cannot invest. So with the prices, compared to Merck and Pfizer, we expect the PE to be very similar, and you see that Pfizer is a bit higher, meaning that the market favors Pfizer to Merck. The PE for Merck has been as high as 92 in the past, which leads me to believe that either the earnings were much smaller in the past, or that the price has come down, or I'm sorry, that the price has come way down. And so we'll take a look at what the price chart looks like. Pfizer is very close to their 5-year high, and well off their 5-year low, whereas Merck looks like they're fairly close to their lowest point ever. So either that means they have room to grow, or they're on a consistent slide down. And so we'll take a look at that in the price charts here in just a moment. All right, so net profit. Like Merck did a bit better than that. We've already seen that there. Return on assets, I think, is important. However, it is important to note that with Pfizer, they do have that over-the-counter portion of their company that's still on the books, and so that may be affecting their return on assets. So that's not something we can really look at in comparison. Merck, a lot more cash on the books, and of course, because of that, their cash to debt ratio is much better. Uh, Pfizer has a bit of short interest there compared to the rest of these guys, which is almost none. And I can imagine that the reason for that being is just because of, like I said, that over-the-counter business, which was a part of the company and is no longer. Alpha is a bit better with Merck, and so that's good to see when the market is doing well. Merck will keep up. It is negative, so they won't do better, but they'll kind of keep up with the market as far as that's concerned. Everything else is about the same. Beta's the same. Uh-oh, went too far. Looks like the return is much better for Merck, and keep in mind that this 1 month return is over the course of 3 years. Okay, so currently Pfizer is beating Merck as far as return goes and price performance, but that's over the last 12 months. And remember, over the last 12 months, we've been in the middle of COVID, and Pfizer has been leading the way in vaccine research and has actually gotten more than a few contracts to not only deliver the vaccine, but also to manufacture the COVID drug Remdesivir. I can't say that. Remdesivir. It's the R word. I'm sure that it has a lot to do with price performance, and again, we'll take a look at those differences here in a moment. But over the last 3 years, though, Merck has outperformed Pfizer in price performance. Volatility is going to be about the same, and it looks like Merck has a better M score, and again, that's all about cash on the books. Let's take a look now at what the chart looks like. PFE stock. All right, and we're going to do this in a couple increments just to get some decent comparisons. So first we'll look at a 5-year chart for Pfizer. And this has been our experience. We got in at about $30, somewhere around 2015. It's like we can't even go back that far. And we're currently at $36. We did get up to 42 back in November of 2018, and we did get down as far as looks like 30. Trying to get there. Yeah, 28.30 back in 2016. Any other time, I think, look, the lowest is 32. Which may have triggered a buy signal. I'm not sure. I don't think it did. Like I say, we've only had one opportunity to buy more of this thing, and almost no opportunity, because even at 42, with only 3 shares, it wasn't enough profit to sell it. So let's take a look now at our comparison with Merck. Let's change our color here. And over the last 5 years, you can see Merck just blows Pfizer out of the water. Okay, so let's zoom in a bit more at 2 years, which is closer to the time frame that we're looking at. And again, you see Merck outperforms Pfizer, no problem. All right, now let's go over the last 12 months, and you see that Pfizer really well, I'm not going to say barely. It looks like they are beating them pretty good right now over the last 12 months. Whether or not that's going to continue, we don't know. Again, this is a whole COVID thing, right? Let's look 6 months. And again, Pfizer way outperforming. And then just for fun, let's look at 1 month, and we see that actually, again, Pfizer outperformed, but has come way down. Now, whether or not that has to do with news of the vaccine rollout, we don't know, and that really is kind of my caution right now, because Pfizer has been at the forefront of the vaccine rollout. That means that they are in much more danger of getting hurt by this, right? I mean, if some story drops that there's been some problem with the vaccine or something happens, all of a sudden Pfizer's going to take the fall for it, even though everyone has taken government money to do research on these COVID vaccines. You know, it's one of those deals where it's like everyone's your friend when you're doing well, but the minute that you make a mistake, you know, all of a sudden you're the worst person in the world. So, you know, that's kind of my caution right now with Pfizer. Um, Looking at the Merck pipeline, which is always very interesting when looking at these biopharma companies, just to kind of see what they're working on. They do currently have a COVID vaccine in the works. Of course, they aren't. I don't think they're anywhere near the lead in getting anything like that done. So whether or not, you know, anything's going to come of that, I don't know. But they do have something in the works. They have something going on with HIV, schizophrenia, and then the rest of it is just a bunch of cancer. And that's what all these guys have been working on over the past, I would say, maybe 5 years. It's just a lot of cancer drugs, and that's good. You know, we really want to see that, because cancer is not fun. And so anything that we can do to try to beat that is what we want to do, and that's what they are working on, is getting cancer beat. Now, these are phase 2 trials. Phase 3 is a bit closer to getting done, and you see that they have a phase 3 HIV drug, and then a bunch of other drugs. You know, bladder cancer, prostate cancer is a big one, ovarian cancer, breast cancer is a big one, mesothelioma, lung cancer is another big one, liver cancer. So, I mean, if cervical, so if any of these drugs can make it out of these reviews, out of these clinical trials and into a review, and if they actually get picked up, they stand a chance of making a lot of money with these cancer drugs. They do have a couple that's currently in review at the FDA. And it looks like heart failure is probably the biggest one. And then the bacterial infection, I'm sure is going to have a lot of competition. So even if it gets approved, whether or not it will be the go-to medicine of doctors in the U.S. or anywhere in the world, who knows? But that's currently what they're working on. As of right now, you know, Merck long term has been the better performer. They have continued to grow their bottom line and their revenue, even in the face of COVID. They are not on the front page of the whole COVID vaccine story, even though they do have a vaccine that they're currently working on, which means that they probably got some government money in order to do that. We're going to go with Merck. Again, we're going to continue to monitor this. This will not be a large position for us. So there's not a lot to risk. And while we wait, we are going to get a decent dividend. I did pull it out. Where is it at? I want to see that for myself too. Where are we at? All right, yeah. So 3%. It's not just, you know, outstanding, but it's decent. Okay. You know, it's a little worse than Pfizer, but again, better price performance long term, and that's what we're looking for.